What is going on, guys? Give everybody just a minute. I am still setting this up here. It's been a while. It's definitely been a while. Jeez Louise. There it is. That's a little bit better. All right. Oops. I didn't get this out to the servers. One second. Sorry about that. Man, the market, though, I will say, has a case of the absolute Mondays. Yeah, I don't give a whole lot of, I don't pay too much attention to Monday kind of price action. It just tends to be a little funky sometimes. Let's see if that gets through. All right, cool. We should be good. Got a couple people hopping in. Appreciate you guys joining. All right, so if you're new here or you're just kind of like popping in, man, I look some of these comments on Twitter stuff hilarious. Basically every Monday, I trade for a living, so every Monday I kind of go through, because I don't put a whole lot of attention on Monday price action, and I want to see how the market really starts to play out. What's up, Jesse? If you guys are new, let me just this. Jesse too, by the way, if you want to hop in, I think in the analyst chat in the server, there should be a link. Let's see, when did I? Oh, no, let me go ahead and send it to you right there, if you're free. By the way, a lot of the move has been made for the day, so I'm personally not really pressing it. Again, Mondays is just like, anything can happen on Mondays. IB is through the roof. There's a ton of massive moves that have already gone down, and everything's more or less at either average ranges for the day or critical support, or that's basically where we are. So I think this is a good kind of stopping point in general. Some things absolutely look like they're bleeding out. Poor Meta does not look good today. Jeez Louise. Although if you've been following these small caps, those look actually really good, assuming that they can continue on higher. Today is, let's see, 187. So what we're going to do, by the way, is we're going to go through and take a look at what are some of the major headlines from last week. What do we need to pay attention for moving forward this week, and maybe a couple trades, as well as just like major economic events and what kind of to expect. So also we'll go through the major indices and take a look at average ranges and see where should we have our targets. Where are the spots that I want to take shots at, either long or short, on the broader indices, and then that's more or less it. So I think without further ado, I'm going to go ahead and just get this started. Jesse, I still see you. If you're there, ooh, funky bubbles. Quang, welcome. And as we go through, I'm going to go through some of the economic calendar, and I'll talk to you guys about what they mean and how to read that stuff too. I know it's a little funky, especially if you're new. So the major events last week was really the FOMC minutes on Wednesday, and then non-farm payrolls on Friday. Just as a side note, when we go through non-farm payrolls, if you're new to trading, when I was new, I'll just say that, I was told that, hey, non-farm payrolls is probably the most important number of the month every month. And I didn't really understand what they meant by that. And just from a very simple perspective, what we do whenever we get a non-farm payrolls number is, and I'll just say I go ahead and mark that day's high and low, and I'll go ahead and show you guys in, when we zoom back and look at some of the prior non-farm payroll reports, how critical those levels are to defining the direction for the following months, plural, like multiple months at a time. Jesse, just give me a hand wave if you want. What is that? That is messy over there. All right, what's up?
My vacuum?
Yeah.
Oh no,
we're gonna get Jesse a vacuum. Still love you though, bro.
Hey, it's just my love sack and then my fridge.
If you guys are, by the way, looking to be bullish, I have a couple things that might be a little surprising. and we have some good stuff to look forward to as well. All right. Well, Jesse's got his OBS. I'm going to take you down. OBS issues. Oh, he's back.
I cleaned it up.
All good. Very cool. So Fed minutes. So what are we looking at when we get Fed FOMC minutes? Just as an aside, again, for anyone new, what people look for, analysts, I say people. What I mean by that is analysts. What analysts are looking for and the market's looking for. They're looking for people that are typically mostly flipping from either hawkish to dovish or dovish to hawkish. Hawkish meaning they want to raise rates. Dovish meaning that they want to be easier on the economy, maybe lower rates, or at least keep everything, depending on the situation, maybe keep them the same, but they don't want to put pressure on the economy. There wasn't a ton of flipping, let's say, on this last FOMC minute release, but what they did reveal is that there are some serious divisions over whether or not the Fed should actually raise rates moving forward. At this point in time, the market's actually pricing in that we will get another 25 basis point hike come next month. I personally think that that's probably appropriate. And the market's actually pricing in another probability that we could get one after that, which I personally don't think that we will. But that said, that's what we want to look for. When the market starts to price in that second rate hike pretty heavily, that's, I think, potentially an opportunity to go ahead and step in. We'll take a look from the technical perspective where that might be. And one of the things that nobody's really talking about, some people are talking about, but is wage gains. So when we're looking at the economy right now, just as an aside, it's mostly been what I'm going to call like a white collar recession, if you will. So like higher paying jobs, those are the ones that were really being lost most recently. In the height of the pandemic, it was basically everybody, but those high paying white collar jobs actually stayed in place for the most part. It was the services sector, which was the sector that was hit the hardest. As we look at the numbers now, the services sector is actually beginning to be the strongest. So that's actually recovering. But at the same time, we're having a little lag effect on that white collar division. So some of those, when we think about like Amazon layoffs, Facebook layoffs, Meta layoffs, things like that, Google, Microsoft, when those large companies are laying off high level jobs or high paying jobs, that's the lag effect that we're starting to see. And so what we really want to look at is wage gains. So if inflation's coming down, but it's still high, we want to see actually average hourly wages start to creep up a little bit. If we don't see, and this is what the market's looking for, if the market doesn't see average hourly wages creeping up, what that's going to tell them is that those white collar jobs are not being replaced. And that's not necessarily the best thing for the economy. Again, good news could be bad news, depending on your price action. But we're in the kind of like a bit of an inflection point. We did get JOLTS numbers last week too. I didn't put it down. I have another slide. We'll actually go through some real numbers. But just as a note, the JOLTS number was actually the lowest jobs that we added. I think it was JOLTS and or NFP that we added since 2020, right? So and they revised the prior 2 months down almost by 100K. Here are the actual jobs, actual data points that we actually got last week. So Monday we got ISM manufacturing PMI. Again, this is like economy expansion, things like that. So 46, slightly lower than consensus. That was actually somewhat market moving, but we want to pay attention to this. Anything under 50, we're not in a growth mode. ADP came out on Thursday. Thursday. And this was the funkiest one. So we got the FOMC minutes release, which didn't really have a huge impact on the market, give or take. I don't know if that's going to be a big thing or not. But Thursday we got this huge sell-off, and let me see if I can pull up a chart at the same time. This might be kind of useful. Let me see if I can put this sideways. Oops. Sorry, guys. Okay, so Thursday, I'm just going to make this a clean format. So this orange boxes, by the way, are average weekly ranges. So Thursday is, what day was Thursday? Thursday is the 13th. So this is Friday, Thursday. So Thursday morning, we get our NFP or ADP. So this right? Yeah, July 6th. Sorry. So we're coming in. This is FOMC the week, FOMC minutes. Really nothing happening here. ADP comes out, and ADP was just like, man, came in super hot, right? And this is one of those situations where good news looks like good news would actually be bad news for the market. We don't want to have that kind of strength in the jobs report. But if you dug into this, we actually did see those average hourly earnings start to creep up a little bit too, which is a good sign. And so this was that Thursday candle. We get our ADP release. It's way off expectations, 497. But it's also ADP, and they haven't really been that accurate lately. And this is the effect that we get right here, this huge sell-off. The following day is Friday, and we get our actual non-farm payrolls. And ADP came out at 497. Real actual NFP numbers came out at 209, which is a massive difference. Market was expecting 225, so it was actually a little bit lower than expected. So not a hot economy, meaning inflation's not going to be going higher. And we basically reversed that entire prior day's move, right? So we came up and we hit right here, which I would call this like a fair value gap right there. But for now, because this is such a critical data point, I'm going to take this and I'm going to say this is going to be my NFP high. And this is going to be for what day this is? June. And I'm going to mark this on my charts. Not June, July NFP high. So follow this, right? I'm going to sync this. If you have TradingView, you can sync this globally. And then I'm going to take the low of that day, which was essentially basically the open. And I'm going to do the same thing. So NFP low. By NFP low. So this is my range for the month. For this month, as long as we're not below that, which by the way, look at where we're bouncing as we speak. This is the NFP low. We're not below it. If you want to look at, from a technical perspective, and you're seeing these big, massive, wicks on your candles, this is actually pretty bullish. So as long as we're above this 438.28, I'm going to stay fairly bullish. At least, we should chop inside this zone. But if we, for about 2 days, let's say if we have 2 days straight that are over that the market's trending, and I say the market, SPY, is trending over 442, call it 443 just to be safe, there's no way that you can be bearish in the market. It's just not going to work out for you. So I'll just say that now as an aside. And if you want to test the theory, let me see, do I have this? So here was June NFP high. This is last week. And this is how it works, right? So we had June NFP high, and then this was the low. Oops. I just need to duplicate this. Here's the low. So this was that prior month's NFP high, NFP low. We can kind of test it out a little bit, but the second that we were fully clear above that, and that was 428.74, there was no way that you could have been bearish on the market as a whole. I wish I had some other ones on my charts right now, but I guarantee you, if you go back, every single month, it actually works out just like this. I've deleted some of the prior ones just because they're not as relevant anymore. But that is how important these NFP levels are every single month. And it just kind of works like clockwork. It's just become something that is like a staple in my trading now. Took basically years to figure out how simple that was, but that is literally how it works. Here's May, right on the Q. So a May NFP high right here. Again, once you're over that NFP level and you're like clean above it for a few days, let's say 2 to 3 days, there's no way that you could have been bullish or bearish in that scenario. And the same thing is true for, I mean, this is January NFP levels, NFP high, NFP low. We never really broke below it, right? Here's one. So this is, what is this? February. So this is February's NFP high and NFP low. We never really got a like multiple days clean above it. So as long as we weren't above it, and this is what could happen this month, is that we could end up chopping in this range. And that's super, super typical. It wasn't until, so this was February. It wasn't until March NFP levels here that came in, but that set a tone. Okay, we were clean above 294. This is the Qs. This works for everything that you're looking at. And then all the way up. And then you would have had still your February NFP levels, broke above that finally, and we're off and gone, basically, which brings us to today, which I need to set. So the Qs are going to be a little bit different, but trust me, this is, I mean, it's just super important and so simple to do. I don't know if you guys have ever seen that before, but Jesse, did anybody teach you that before, or is this something that is just me?
About the NFP stuff?
Yeah, just the highs and lows.
Yeah, I haven't, and I've never marked it on my chart, but I'm sure it's viable, something to watch for sure.
Yeah, it's that important. So, while I do this,
have you tried doing it with like CPI?
Yep. So I do it with CPI. You can do it with CPI, GDP, and all of that stuff. I will just say like NFP is the one that is the most, like that's the one for me. Like that of all those numbers, like that typically sets the tone. So the Qs have not reclaimed that NFP level. So for now, what's interesting about this is that the Qs haven't, but let's take a look at IWM. Yeah, IWM today is the strongest sector by far, right? So we're looking, this is, here's our IWM level. I'm just going to say NFP high and then NFP low. We're clean above that at the moment. And so this is what the market's really been talking about. The note on our graphic this morning actually says this is the most hated rally ever. And the reason that it's been like that is because everybody keeps talking about this, like, oh, these, they call like Magnificent Seven, these 7 stocks that everything is just, you know, there's no growth anywhere else except for these 7 stocks. That's not really true. Oh, by the way, that, and it looks like July NFP low. So last Friday's low lines up with March's NFP high. Ooh. Always blows my mind how these things correlate so easily. So for right now,
and I was having a little bit of trouble with my browser, but you said you're taking the high and low of that day when it's released.
Yeah, I'll take the pre-market low too sometimes, but the actual trading low is solid, just as solid.
Gotcha. So even though NFP is coming out pre-market technically for SPY, right, you're still doing the low and high of that trading day.
No, I'll use that pre-market.
Oh, okay, gotcha.
Yeah. You can use that pre-market. Also, that trading day, both legitimately work. Sometimes, like it was, I think it was last month on SPY, where we got to the pre-market. Yeah. So this was that pre-market low. So I did use the pre-market low,
right,
on SPY here. So this is that release. Created a little bit of a gap, but again, to me, that gap's more or less filled. But that high there. Super simple. Every month, second Friday of every month, you get one of these. So it's just what I've learned to do. All right, let's go ahead and do another quick checkup. So unemployment rate, we talked about 3.6. They're talking about a very strong labor market. Good night. Look at all these reversals too. As I'm speaking. And this is the average hourly earnings month over month. So for June, the month of June, average hourly earnings slightly up. Consensus was to be 0.03. So that's not getting any worse for right now. That's not horrible. This last bout of earnings, is basically over, by the way. So next, probably in the next 2 weeks, I believe the end of this week, we start to get some bank earnings. And so that's going to really kick off a lot of this next coming earnings season. But net, last quarter, so we had 26 of the, I tracked the Dow 30. So this is what this is, of the top 30 Dow 30 components, 26 beat and only 4 miss. That's not horrible. It's better than some of the other quarters. So this is a full year of data. So before, not Q2. I need to change this. Let me see if I can edit. This is Q1. Goodness. Q1, 26 beats, four misses. Nobody just meets expectations. Last quarter, we did have 17 beats, two meets, but we had that was last quarter. Last quarter was one of the worst earnings seasons I'd actually seen. And last quarter, the market actually went up. So to me, that told me that, hey, look, expectations were super, super low because that was really bad. And you'll start to hear people talk about this earnings recession. And, what I'll say about this is when you look at the numbers in terms of who's beating and who's missing, it's not really an earnings recession on paper. And the argument to that is going to be, well, Wall Street CEOs, they're super smart. They're get really fancy with their accounting and they can make things look a little bit better than they actually are sometimes. And, I have to give them that. That's also true. So we still want to be somewhat speculative about that. Is that Penny? All right. We'll take a look at this. What's up, man? Interested in Netflix revenues keeps getting up. Netflix. We'll put that on watch. I like that one. The 4 companies that did miss expectations: American Express, Boeing, of course, Walgreens, and Nike. So Walgreens and Nike, I think that's a lot to do with healthcare as a sector has really not been that great. Nike had a lot of China exposure and consumer exposure too. Boeing, that thing's just been super beaten up. I actually think it's time for Boeing to reverse. It was interesting about American Express, just seeing that where is it? I don't have MasterCard in here. Some of the other ones like MasterCard, things like that, did actually not miss. So this is more around like business exposure. But this week on the docket, let's see. So this week, really nothing but a ton of speeches today, and that's why you'll see this market kind of whipping around. Again, it's Monday. I wouldn't put too much stock in Monday price action, especially with so many speeches on deck. Tomorrow we have economic optimism, which is kind of a nothing burger. I just say that, but the fireworks really kick off on Wednesday when we get the CPI number. Thursday we get producer price index, which is kind of a leader to CPI being consumer price index, PPI being producer price index. So the question is, consumer price index, that's consumer inflation. From our perspective, how much am I paying more? PPI is producers are the people that we're buying things from having to pay more. And then the logic is, will they pass that on to the consumer? Some of the China stuff came out too, and it was a lot lower than expected. Friday, we do get consumer sentiment. That's kind of like an intraday move typically, but nothing really major. Let me see. I think I don't have a whole lot. Yeah, let's go ahead. I'm going to go ahead and take this one down and take a look at the actual calendar here. So we have 1, 2, 3, 4 speeches today. I think these are more or less done for. So that's probably why we're getting a little bit of relief in the market at the moment. We do have Bullard first thing in the morning. And this is that CPI, right? So this is the biggest thing for sure tomorrow. So this is the inflation rate year over year. Currently, consensus is at 3.1, coming down from 4. So remember, the Fed's target is 2%. What I'm going to do is I'm going to go ahead and open this up. Oh, it's not what I want. We're coming down from 9, which is wild to me. And the month over month. So for the year over year, what we're going to look at is we're going to look at 12 months back. So the way that the year over year number works is that we're going to get a new monthly number to come up, and we're going to drop one of these year over year numbers. So the one that we're going to drop next month or this Wednesday is this 0.64%. and that's why it's like, okay, the market's really now starting to expect that inflation's actually going to come down quite a bit. Because if we come in with a month over month number somewhere around, this 0.3%, then that's going to drop, not this, that's actually going to drop this year over year by a full third at least. So consensus coming, yeah, and that's exactly what they're doing. Consensus coming in at 5%, which I don't know. If it comes in any lower than 0.3%, then that's going to be, I think this is pretty accurate. But then we have July CPI that's not going to move the market. And then we start dropping these last two big ones. And these last two big ones, that's going to be the big deal. So once these are off, then we're actually going to be looking at probably that 2% inflation. And that's, as long as nothing else goes haywire, that's probably where we should be. We got another 1, 2, 3 speeches. God, how many speeches do we have this week? Then we get PPI, another speech, consumer sentiment, man. And then let's see, when do we get the actual, I'm going to go into this CBOE Fed watch tool is how we get what is the market expecting? So I'm just going to compare right now. So we are currently at, when is this going to come in? So rate decision, currently at 5.25. So market's expecting a 25 basis point hike, which would put us about 5.5. We got about 90% probability that's going to happen. That's probably accurate. That's July. September, the next one, they're not really pricing that in yet. So if we get tomorrow some kind of crazy, not tomorrow, Wednesday, some kind of crazy move in CPI, and maybe it's a little bit higher, and this probability for September jumps up quite a bit, either September or November. Yeah, they're about 35% probability for November hike, but still pricing in about 50% probability that this next one is going to be the last and final straw. December, nothing. And then if we really want to see the end of year, yeah, so the market's pricing in right now that there's one more rate hike, and that's coming this month. They're not pricing in a second. So if we do have a possibility of a second one coming, that's when we'll probably see a big dip in the market. Well, maybe it's a dip. We'll have a price reaction, that's for sure. All right. So for now, I think we have these. What I wanted to do really quick. So if we can stay over this level, 438.25 on SPY SPY, for now we can trade. I can trade to this fair value up here, right around 442, which would be actually what I would do personally is probably just tag that fair value 442.25, something like that, for the first upside. I think honestly we could chop. I think this is going to be a huge chop week. It's not going to happen till Wednesday that we break out of this range. I don't think we're going to break out of this range until Wednesday. And then if we do break out of that range to the upside, I could see 447. And then to the downside, I would say we'd probably be hitting this fair value down here, right around, which this orange box again is an average week's range. I'd say we would probably pop up a little bit first, somewhere around this 440. And then that would take us an average week's range down to this fair value. Just my 2 cents. This is SPY. By the way, I'm not using SPX or ES, which would be about 432.69. So a real trigger for me would be below, if we can get below 438 clean, then you could first trade down to this 436.38, and then post Wednesday, if it's really bad, okay, 432.50 would be my ultimate target for the week. If it's good for now, if we're over this 440, I think you could clean trade up to that fair value, basically today's opening range. But otherwise, I honestly think that we're just going to chop in this really tight range until Wednesday, unfortunately. So that said, Qs have not gotten over their NFP low, which when I look at this kind of setup, so SPY is inside the range, Qs are below the range, diamonds are still inside the range. Just going to take this NFP high. And this NFP low. Jesse, feel free to jump in too if you have anything.
Yeah, I was actually going to say we are inside week from last week, so
yeah,
you were given all those levels. 444.08 is the high of last week, and so everybody who trades the strat is looking for that to break, especially with us having, obviously the weekly chart. We're very much in a bullish trend.
Yeah.
We are near the bottom of that inside week. So even if we do dip and then if we close green, I'm still looking bullish. Overall, I'm looking bullish the next couple weeks. Especially it can really depend on CPI, but from a technical analysis standpoint, I would be leaning more bullish than bearish.
Just raw technicals, right? Like if you wanted to grab, okay, let's say we grab a fib from this swing low to swing high. We're sitting at that 50% retracement and that prior breakout level literally right now at 437. So just from a pure technical perspective, you can't really be super bearish. You want to just be a little cautious that this could just be like some massive, cup and handle type setup. Not that I'm a copy trader.
And this morning was actually, not for, and I fully expect us to chop until Wednesday as well. At least, maybe not chop, but we're not going to find new highs or lows until we have that data. So today's actually not been that bad. Last couple of weeks, I've really struggled with capturing a ton of percentage or points profit on anything, just from the chop that I feel. But that's mostly because I'm a morning trader and there's been some afternoon stuff. But so far, it does look like we're waiting until Wednesday to see which way of this structure we're going to break.
Yeah. And just as an aside, if any of you guys trade, like if you don't see me trading the servers, today, the only thing I really opened was a credit spread on Amazon. And that's like a put credit spread because to Jesse's point, I don't think that we're going to break out necessarily. So I think it is like Iron Condor type, trading for the moment, but we're closer to the downside than the upside. So put credit spreads is where I went. One thing to note. So if we're going to go into this rotation, so if you guys remember, we're talking small caps, we're talking rotation, that, most hated rally ever. Again, it's because of those 7 to 10 mega cap stocks that are really chewing up the majority of the market cap. So if you were really a bull, what you want to see is that start to really kind of like even out across the other sectors. So for me, I'll look at sectors, just simply something like that. And the sectors that need it are going to be industrials from a large cap perspective, healthcare from a large cap perspective, real estate from a large cap perspective, and small caps overall. So where do we see industrials is actually right here. So DIA is your diamonds. This is why I'm still long Boeing. They have earnings coming soon, by the way. This May NFP number also. So this is that May NFP print, NFP high and low. So we were below that May NFP low, and then we reclaimed that whole range. And yesterday's NFP print was actually right around that same NFP high. That was our July low. And so right now we defended that like super strong also from a, SMC smart money concept by perspective, if that was the higher low, so here's your low, higher low, here's your key order block right here. You can kind of line it up right here. This actually looks pretty freaking bullish to me from a broadening out perspective. So industrials here, not the strongest sector on the day. The best part about this, the strongest sector on the day is your small caps, your mid, like IWM, Russell 2000. And this thing right here just like took off out of the gate. I will say that we're coming up to a pretty key resistance level right here. So this may be where we start to stall out potentially. And we did create a nice little fair value gap down at 185. So if you get a shot around 185, something like that, or maybe between 183 and 185, I would say that would be where I would be looking to go long. Again, this could be some kind of whipsaw on Monday or Wednesdays. Small caps move an insane amount when they do get going. So just be super careful if you are trading those. But above 190, I'd say just to be safe, this thing is gone, right? Like she's off and running. 193 would actually take us like a full average week's range, even if you fill that lower fair value somewhere in here, right? That would take you to this fair value gap here, which is going to be my first major target, just over 190 on IWM. If we can get there, we got this whole here consolidation here. I just marked these and kind of like volume peak to get through, but we're really just kind of building it right there. So that's what we're sitting above. We're sitting above this consolidation. Maybe I can make this a little bit cleaner here. Here's that consolidation. Man, TradingView has changed the way that they do things and like it completely messed me up on a lot of stuff. So I'm gonna just drag this box over and see like how does this react. We're right into it. So if we can get over that for a couple days, I think we tag this, maybe we pull back just a little bit, something like this, tag, and then we'd be off. That'd be ideal to see, but we won't really see that until after Wednesday. I don't expect any major moves until then. All right. Let's take a look. So Penny's asking when I look at individual stocks, I'm just gonna go I do multi-time frame view, right? If you're not a stratter, sorry, this is how we start every time. Interest revenue keeps going, and Netflix doesn't have to pay its writers. That's a good earnings call. So Penny's, so Netflix doesn't have to pay its writers. So Netflix has a lot of international stuff, and so like I don't think that they're affected nearly as much as someone like a Disney or Warner Brothers in terms of the U.S. writer strike, just because I mean it has so much international stuff. I just don't think that it's going to be affected nearly as much. This last from 305 3 something give or take, this last move was really mostly about like the password sharing thing. So once they flip that switch and open their ad supported model, like they're just growing revenue without cannibalizing, let's say, the rest of their subscription revenue. So here's what I have. So this 458 was really my big target, 458.97, and we more or less got there. This is a weekly perspective, so I have to see this is that prior base, so and this is that breakout right here, and that's 458.97. Also happens to be on this big old earnings dumpster fire where it reversed course right here, 458 to the penny. So we're basically pushing up against that at the moment. And this is a very long-term perspective. So just bear with me on that. I'm just going to take these two levels here of this prior consolidation and just sync them. So it's weekly, daily. Yeah, we're really high and tight. This looks like it's going to hit this. I think we get to this 458 level, but I don't know that we're going to completely break out. And if we do, that would bring us to 470. Man, this chart longer term actually looks really good. But if we do break that out, let's say we'd hit this 476, and then I want to see it come back down, retest that, and then I can look for a much larger move. That would be your typical price action. And this breakout level at the moment is going to be what is this? 450.72. So 450 is kind of like your psychological level. I think on a weekly, this looks like it's going to be a while. I don't know that this happens this week. I don't think this happens this week. I can't really go for that unless we're over that. This is going to be 448. So red lines on mine using a strat. This is a quarterly high. So quarterly high, 450, 448. If we're clean above that, like on a couple 30-minute candles, then yeah, I think you can go for it. For now, it looks like we're going to head there, but it's had some trouble so far. I guess depending on how you want to trade it. I would not expect this or anything like this until way after CPI. Do you have a take on Netflix, Jesse? I know you don't really trade it that much.
Yeah, I don't day trade it, but I do have it in my long term. And I continue to dollar cost average into it.
It's an amazing day trader if you can catch it right. It typically lags the rest of them. So yeah. So it's not usually the first mover. But this is going to be an XLC, so your communication sector. And so that's what I'll do. So I'll look at, this is just the sector tracker. I'm going to go into communications, index weight. Typically, it's going to be Meta and then Alphabet, and then Netflix. Here's 5% weight of the sector. Between Meta and Alphabet, that's 50%, give or take, of the entire communication services sector. So if these two are running like hot and heavy, then I'll really look at Netflix and be like, oh, okay, this is a laggard in the group for sure. And that would be your cue. And I always have like these major sectors on like a side screen, maybe not exactly like this, probably charting, stuff like that. Okay, I'm sorry. You totally asked this and I missed it. So NFP is non-farm payrolls. That is basically how many jobs are being taken for the month. So how many new jobs were actually placed this last month for the economy? That's probably the biggest thing. No, yeah. Sorry, guys. Yeah. NFP. Man. All right. So maybe I went a little too far. Non-farm payrolls. If you don't know what it is, so it's how many jobs the economy added. This is going to be really like your biggest factor in GDP, things like that. But when we're talking about inflation, just remember, inflation is dictated by like velocity of money. So like we could print, I don't know how much we've printed, $7 trillion of funny money. But if nobody was working and nobody was buying things, it didn't matter to inflation. That's why while we were printing all this extra money, we didn't have inflation. Inflation really didn't show up until people started going back to work and we started spending money. So like, imagine if you owned a shop, if you own your own business and you sold widgets, right, for $100 a piece, but nobody's buying your widgets at $100, you have to bring your prices down. But all of a sudden, if there's enough demand for your widgets, then you can start charging more. You're not going to charge more for your widgets if you're not selling anymore, right? So that's how this works. That's the velocity of money. So what we're looking at average hourly earnings. How much money are people earning per hour on average? And how many more people are going back to work? So if the economy looks like there's more money that are in consumers' pockets and more consumers are working, then we think that the price of widgets might go up a little bit, right? And in the interim, the Fed is trying to basically control the supply of money at the same time via interest rates. And so that's, I think, really my shoddy attempt at explaining NFP and inflation. But it's not just the fact that we print a bunch of money. It's about consumer spending. When the Fed talks about their favorite gauge being what we call PCE, personal consumption expenditures, that is actually right, core PCE month over month. This is the Fed's number one gauge, and this is how much are the consumers actually spending. Inflation is just, okay, well, this is the calculation of how much goods and services are going up or down in price, but that doesn't really matter if nobody's buying anything. So that's why consumer expenditures, PCE, is actually more important to the Fed when it comes to determining their actual interest rate decisions. Hopefully that helps. Sorry for not getting that earlier. That my apologies. Cool. I got a couple things. So Amazon is mine on watch right now. Man, I had these calls that just got completely jacked this morning. I actually cut 99% of it out of the gate. I had a 127.50 stop. It was just like insta flushing, and we're here right now. I did sell some put credit spreads, and I'm looking at these two, like right here. So this is the defense from a price action perspective. I like a 30-minute, so I'm just going to throw a 30-minute on here. So we got a nice little double bottom on Amazon today. I sold very tight credit spreads. Can we get down a little bit lower? Sure, we can. 125.56 would be that lower fair value right here. Even then, at this point, this trend is still intact. Tomorrow is Prime Day. Could it be a sell the news event? You bet your ass it could. So at this point, it's a little bit. I don't want to jump in front of it. I have what I have. I think for me at this point, I will probably end up day trading this, but I need this to get and hold back over 127.50 for me to really think about actually trading this. And I need to see like 45 minutes clean above 127.50 for me to take a shot to the upside here. And even then, now after this morning's kind of sell off, I have this fair value from today's pre-market. Oops. Here, fair value from today's pre-market is going to be in my way. That's 128.89. And so that's going to be, if I do take this shot to the upside, that would be first profit target. Otherwise, I had up to 133, 135 plus, which is still intact. Now it's just a matter of when. What does the velocity of that move look like? At this point, I don't want to have any longer dated contracts out there. I would just honestly keep what I have. Sell some credit spreads. I don't think we're really dipping too much lower. I think that's more of a layup than buying calls at this point. I haven't seen, what is the skew? There's not a lot of call skew. Ooh, there's a lot of call skew after July 28th. That's probably earnings on there. And then Boeing is another one. So Boeing, I'm still long, super long. I know Penny hates Boeing, but that's okay. Earnings on July 26th. I actually have August contracts on this right now, and I'm looking to sell some like upside calls for July to hold over their earnings event. I don't want to do it yet because IV is still going. I want to have a little bit longer dated because if this goes, when this goes, this is going to be a big fat move. It's not going to be a little move. We have right now that 119 give or take fair value from that prior sell off. This was a strike that we've essentially recouped all of this. This was that Paris Air Show sell the news kind of event. So I think we should recoup this also and then carrying on this hopefully big fat nasty breakout, which should take us way up there. This is like a year and a half plus of consolidation. So this one I need to be patient with. It's not really a day trader for me on that. All right, cool. Jesse, did you want to take a look at anything?
You haven't covered Dixie, have you?
No, I haven't. So that's a good point, right? So the Dixie had been on a pretty heavy sell-off. This is this last week, and
yeah,
so
look at the weekly chart real quick. Just last week.
Yeah,
we went outside week And pretty much what I said in my little
2 down on the week
thing,
right now.
Yeah, and so I'm looking for the downside for Dixie. So long
Commodities.
dollar. Well, yeah, long. Well, yeah. Other than that, commodities. The dollar is losing value. The indices will rise. Gold will most likely rise.
Yeah, look at GDX. Good night.
Yeah.
So gold miners and China, anything that's not really denominated in US dollars, like Japan equities, things like that. Speaking of international, BAVA, I'm not a big trader of BAVA, but the Dixie does support it. It's holding right now. I think we should put this on watch. Do you have this on watch?
Nope. God.
Yeah, this is big nasty consolidation. Let me see this. Yeah, we're over the 200 day. This is orange is the 200 week. Moving averages are really tight. Looking to squeeze. Earnings on August 17th. That's a pretty solid kind of accumulation setup. Risk to reward's pretty low. I don't know that that's ready for options, but accumulating on equity for sure. I can't give any longer term on Bob. I just won't do it. Won't do it. But here, what I could do is YINN. I'll take a look at that. So this is 3x leverage China. Yeah, that supports it. This Dixie chart, yeah. So for right now, that downside target's what 101.92. Any lower than that for sure, you go down this consolidation. And if we drop below, that's going to be showing up on GLD. What's your main trade against this?
Trade against gold?
As a pairs trade.
I don't do that type of stuff.
Yeah, so this
you mean XAU USD would be gold.
Oh.
Or GC.
That's gold. Yeah.
Yep.
Yeah, so gold.
Sorry, I thought you meant we're like inversing gold.
No, that's good. So this is gold. 180 is your kind of like pivot, right? From that last double bottom. You got a 618 retrace already. 6.5. Solid. From an equity perspective, this is GDX. So this is the miners. Yeah, this looks pretty good. So here's your major prior top consolidation breakout. Retesting it today. The clean over this 200-day moving average. If I zoom in, this is a 30-minute. Yeah, dude. This is like rippy at the moment. Good call. What do I do for GDX? So NEM's the base component, typical laggard. Yep, $42. That's dirt cheap for this guy. These are hard to trade for the most part. GDXU is typically where I go. I like the price. This is just 3x leverage GDX being the miners. You can always go GOLD as in Barrett Gold, NYSE Barrett Gold. And there are a couple smaller cap. So typically, like if you get into this space, then the smaller cap names, and I'm spacing on a couple of them. You have to ping me on Twitter or something like that. What about Nat Gas? That would be there also. Holy breakout Nat Gas. Okay. We've been in this range forever. That's not it. That's the wrong chart, guys. Why aren't you yelling at me? Dingbat. All right, now GDX. Nat Gas is not breaking out. This thing is stuck in this crazy range. We did. What did I see last week? Last week we had OIH moving considerably. This massive move. So OIH is oil services. That'd be like your SLB Schlumberger. I can't believe I missed this move. It loves to squeeze like that through its 200-day. Just a huge, nasty one. A lot of people on Halliburton right now. That is tied to Nat Gas quite a bit. This has That is not Halliburton. Hate how it does it. Already made quite a bit of a move, so I'd probably do a measured fib pullback. Take a look at these 30, just under 35 on Halliburton. Schlumberger. And then EQT is like your super levered nat gas one, which honestly this has made a bit of a move. This does not look bad though. And Devon, it's your oil energy sector. Devon's nice consolidation. We'll see if you get it. This could be a mover when it does go. Do you guys have anything else? All right. Let me just scroll through. No, I think we're good.
Sounds good.
And we're pretty much at time. So I appreciate you hopping in, man. You want to you got anything to leave them with?
Nope. No, I'm focusing a little bit more on the forex and gold side while we're chopping today. And so I've early morning this morning at 8 o'clock I did a gold trade at 3.5% or 3.5 R, and
nice.
It's a good day. So if you guys don't look at Dixie while you're trading, I'd encourage you to look at it. It's a good kind of heat map. If Dixie's rising, we're probably going to fall and inverse. So yeah, but no, it was great. Thanks for having me on.
Yeah, man. Sure. This is my typical heat map. I actually got Bitcoin up here at the moment as well. So yeah, rates, ZN, if you will, for the 10-year, Dixie, crude. And then I was just looking at this. So I've been selling these puts on LabU. This is your biotech sector. Finally getting a bid today back over 6. Huge move today. So this is interesting, right? This is like biotech, healthcare, that GDX move that you're talking about based on the dollar coming down. I think that's super valid. Also really interesting. So I think these are going to be the biggest sectors. Clearly not going to be tech, right? So it can't be tech if we're not over our NFP level. We're just kind of basing. Looks like we're attempting to challenge it at the moment. We probably get there. But the stronger sectors, it's going to be IWM first. So small caps, that's going to be the focus. Then industrials. Yeah, here we go. Right. It's happening as we speak. And you can see this RSP is your equal weight ETF for the S&P 500. And we are not anywhere close to what SPY looks like. This means that we are broadening out as a sector. This is as bullish can get. And we always, whenever we get in these major reversals, if I'm leaving you with anything, we always start out like it's super concentrated in 5 to 10 stocks. That's very typical. And then it's always like, oh, we're gonna, if these guys don't hold up, then the market's gonna tank. And what happens almost without fail is that the market does start to broaden out. Just doesn't happen at the same time. And I don't think anybody can really say that this is like many other situations in history. But what I will say is that this has been the best first half of a year in a very, very, very long time. I think it's the best first half in like 20 years. I don't know if anybody caught that metric, but whenever the S&P has been up this much in the first half, it typically 100% of the time actually carries the back half. So maybe that September swoon, summer swoon, whatever, it might give us a little bit of time to digest some of these moves. But the statistics, your typical seasonality has got to get thrown out the window at this point. And then you want to start looking at those non-typical situations, especially when the first half of the year has been this bullish. So that's it. That's what I got for you guys today. I think, that's more than enough. I'll see you guys on Twitter if you want. We do stock picking space later this afternoon. And dude, Jesse, have you played with this predictogram thing?
Nope.
Oh, dude, you got to go predictogram.com. We'll give them a little shout out. But I've been having a ton of fun on this stupid site. But follow at Paper Gains Inc. Or actually papergains.com/link. You'll find the stuff, and then you can follow me over there. I have a lot of stuff posted on Twitter. It's super fun. They're doing a bunch of contests. And let's see.
You said you're on Twitter?
Yeah, it's Look at this. Right now, they do these contests. So like you got 26 minutes. If you want to guess what the closing price of the Qs will be in the next 20 minutes, they're gonna give $100 to the top 3 predictors. Pretty cool. They do these little things all the time.
Interesting.
Yeah.
Maybe I'll do that.
Yeah. I like it. They got teams, different teams. So like this is Wolf's team. They drafted me to Team Ace. So here we are. That's Jordan who does the morning spaces. But this is where we are. I like it.
77%. Look at you.
Well, it's prediction, so it's a little bit different, right? So like you make a prediction. What's really cool about this? God, I'm not. There's nothing for me to sell. I don't get anything. So like, you could do this SPY, type it, and then this is the consensus. They have these consensus. So where does all the people that are making predictions, like me, or like you'll probably see a lot of these people and know a lot of these people. Like this is where the consensus is for the day, for right now. It's going to be within this kind of range, right? You can do this literally on anything that they have listed, and like consensus bands. These things are money, dude. But anyways, you can make a prediction. Let's say Apple is going to go up or down within 30 minutes. You know, all kinds of different ones.
There's only so many you can do.
Yeah. You know, where is it going to close? It's going to go up to, but not above, down to, but not below, that kind of stuff. And you can predict like, where is it going to close? If you want to just do ranges, things like that. It's kind of cool. It's fun. But yeah, if you're stuck over trading or something like that, it should definitely help for sure. And I think it helps a lot of people with their personal trades. So anyways, that's a wrap for me.
All right, man.
All right, guys.
I'll see you next week.
Adios.
See ya.